In terms of volatility space, so if we look at that, realized vols had remained subdued after the FOMC. And even with that pop post non-farms where we saw a decent update, carry was very much still in positive territory. Okay, so if we see here our carry bars, these red bars tell us the difference between realized and implied. And whilst implies did come down, and you can see there that was the reset post FOMC, you still had a positive number there, right? You still had the market not really realizing. Now, since then, since the weekend, we have obviously had this uptick in implied volatility. So you see implies popping back up there, seeing an even bigger move there in Ethereum. And whilst realized has rallied, we haven't had like a 10% plus day yet in spot. That may well happen by the end of the day for all we know, but we have seen a bounce in realized, but not quite enough to close that gap. So you're still looking at very positive carry numbers given the implied pop that we've seen. Now, even though the carry is very positive, we are not stepping in to fade that and selling gamma here, basically, right? I think that'd be pretty stupid and pretty dangerous to do right now. Obviously, it could work if you did it, but it's not the risk-adjusted way to do things right now. Okay. Now, vol sellers did push those implied vols down. Is the usual front running of the DOVs and things like that. But this 5% down move overnight has really kind of, made vol catch a bit of a bid. Like I already said, Ethereum implieds are back towards sort of 90 plus. And while CPI on Thursday would have been the main event and volatility would have probably, reset a bit after that event, it does seem that I wouldn't be surprised for it to remain elevated until the drama between FTX and Binance settles down and we get some kind of conclusion as to what the state of play really is. And I don't think that's about to happen in the next day or two, right? So we're going to this is probably going to linger for a good couple of weeks now that this thing's in motion. Okay. All right. So that's realized vol. If we look at term structure, what do we see? So obviously a little bit of a pop in short dated term structure. So this is your typical kind of shock where front end catches a bid, back end kind of doesn't so much. The back end stays muted. We had a steeper curve. We had a flat curve on ETH, but we had a steeper contango curve in Bitcoin, which was more like this. And you see this front end has like jumped up basically. So the curve is looking a lot flatter in Bitcoin and is looking inverted in Ethereum. If we look at the term structure of the spread, we obviously see 35 vol in the front and about 20 vol in the back. So Ethereum catching a massive bid in the front makes sense because it's the higher beta name. Obviously, if there's going to be a ton of liquidations or whatever, it's probably a lot of it's going to come out of ETH, more so in Solana actually, and we'll talk about that later. But yeah, there is risk of ETH really sort of starting to snowball to the downside if this thing turns into something real. Okay. Now, whilst this spread at 35 looks elevated, we look at the vol spread 6-month history. We see that spread is quite elevated again, back to this, range before the sort of merge spike. It's not a level I'd really be fading right now for obvious reasons. I do think upside calendars might make sense to fade if you want to fade the inverted term structure. But at the minute, it feels a little bit premature to step in and do that right now. Spot, though, is back in the range, right? So obviously, we were trading in the range for ages, realizing next to nothing in both the cryptos. Ethereum was kind of in this range for a long time, as was Bitcoin. We've popped out of it, and now we're straight back into that range. So the question is, are we going to break to the downside, or are we just going to find ourselves range trading again now, where you've got a bit of bearishness against some of that bullishness counteracting each other, and net we go nowhere? Remains to be seen. But, I think the risk of a break to the downside is clearly there. So I wouldn't be in a rush to sell downside right now, even though downside has repriced quite a bit higher. Okay. On that note, if we have a look at SKEW, just to see where SKEW actually is, we see Ethereum SKEW kind of leading the charge, back to around 10 vol points, right? So in the 1 month space, we've got 10 vols again for puts over calls, and that had briefly touched across zero. So with the spike that happened over the weekend after non-farms, it looked like calls were going to catch a bid. They were getting bought as people tried to play the upside break, and puts briefly went at a discount to calls. And we haven't seen that in a long time, but it was very short-lived. Same thing on the 3 month, tagged zero and then bounced again. It's back to about 5 vols in the 3 month, and it's about 10 vols in the 1 month space. Okay, so the memory of 3 Arrows Capital, Luna, those type of swift collapses in the market on the back of some sort of credit issues from some of the big counterparties in the space, that memory is still fresh in everyone's heads. And therefore, SKEW was very, very quick to reprice because people are, oh shit, if this is happening again, we need to be protected. And that's why you see a very fast reaction in downside puts, basically. Okay. And front end SKEW obviously tends to be the leader there, right? So whilst you've got 1 month up at 10, you've got 3 month at 5, weekly SKEW can go 20 plus very, very quickly if this continues to escalate. Okay. Right. If we then move on to our next sort of bit, as well, you can look at the dashboards for yourself. It's kind of what I've been saying, gives you the weekly change. Obviously, the strategy compass is going to look at mean reversion type trades and say buying calls on Bitcoin, for example, makes sense here. Like I say, I wouldn't be in a rush to do that. Things are actually quite neutral on Ethereum right now on the strategy compass, saying that both vol and spot are kind of mid-rangey, so there's no obvious trade to do. But you look at the positive carry there at 23 vol points in the 89th percentile for Ethereum. Does look juicy, but like I say, it's a bit early for me to fade this type of move. I don't think that's a particularly safe thing to do right now. Okay. If we look at the crypto option flows, we see that we did see some sizable short-term hedging going on last week. People were using 11th of November, so this Friday expiry, 16K, 15K put spreads. So relatively tight put spreads out of the money to try and get some leverage and get some protection. At the money, straddles were getting sold in December. See big orange bars there. That was the vol selling as the market kind of trying to extract some yield out of expensive volatility that wasn't realizing there, choosing December expiry. And then speculative buyers came in because the break above 2,100 in Bitcoin over non-farms. We did see some buying on 11th of November, 18th of November, and December calls. Strike-wise, kind of 2,100 all the way, 21K, sorry, all the way up to 24K. So there was a bit of spec buying of calls coming in as people tried to play that. That was before what happened at the weekend. In terms of Ethereum, it was a 50-50 split between calls and puts, similar to Bitcoin. We saw local gamma sellers, as we normally do with the DOVs. That was on the weekly stuff. As people kind of, did the post FOMC front running of the DOV selling, and then actually that vol bottomed out on Friday and then caught a bid after non-farms. November and December call buyers in the 1,750 to 1,800 strike range to play that breakout, similar to that call flow that we saw in Bitcoin. And then some put activity in November and December. Given that SKEW had flattened quite a lot, close to zero, there were some opportunistic trades going on the downside there for people still looking for hedges like I was. I'd already got my hedges on, so I didn't add any new ones. But it made sense, if you hadn't already hedged up, it made sense to be buying puts given how much that had flattened out. Now, over the last 24 hours, we have seen some more flows come into the market that were not captured in those the old data. So we can see here that in Ethereum, there's a big skew towards buying puts. So that's here. We see that, and the strike ranges are kind of 1,300 down to 1,100 there. People buying puts, and then also calls getting sold. And obviously overwriters, given the pop in the front end, overwriters are going to be, rushing to sell this expensive upside now, because the risk of a really sharp breakout to the upside with this cloud hanging over our heads has probably kind of gone away. Okay, so that's kind of what we're seeing in Ethereum. That put flow kind of inducing, the sell-off inducing that put buying and driving weekly SKEW and short-dated SKEW to 10 points, and it was 0 at the weekend. So it's a really, really fast, sharp, swift repricing of SKEW. Now the Solana surface is really getting quite stressed. I've called it a hyper inversion of the term structure. That front end went to like 180. So we've seen a really steep inversion. As you'd expect, Solana sold off a quick 30% on the back of this. And short-dated puts on the downside are trading, 200 vol plus. So very, very steep inversion in Solana and that market. Not super liquid though. So obviously people will scoop up what they can in Solana, but once it gets to stupid levels, that's why they then move over to the likes of Ethereum to get more size on for their protection. And that's kind of how it works generally, right? People get the thing that they need the most, but once that liquidity runs out, they're going to go to the more liquid options, and that's where I think Ethereum is the one that kind of really caught that bid as well. Okay, so that's what we're seeing in terms of flows. Be careful out there. This market is reminding people that it knows how to move. The SKEW certainly is reminding everyone, given how violently it's repricing. So just stay careful out there. Hopefully you listen to us. You got yourselves hedged up nicely using that strength in the market, and you're feeling pretty, calm right now with this latest reversal. All right, that's it from me. I'll catch you guys soon. Bye.